Hi everyone, you are watching Commerce King Academy, and in this lecture we are discussing here about chapter number 6, accounting for bills of exchange. Alright, before starting of this lecture I will give to you a snapshot of this chapter which we have studied in last videos, which is we are discussed about the introduction about accounting for bills of exchange in earliest or last videos. Alright, as well as its working and its parties and the structure of bill of exchange, that how it works between the parties. Before starting of this lecture, another thing you must keep in your mind that bills of exchange comes into existence, which is why the root cause or main cause is this behind existing of bill of exchange. When credit transactions comes into existence between the parties, the bill of exchange plays a role as a credit instrument between the parties. Am I right? And also we are discussed about the use of bill of exchange and as well as how parties use bill of exchange. They makes credit transactions between or among each other, and ultimately use of bill of exchange by the parties for convenience in reception of payments. All right, when we go ahead, so we have studied or acknowledged types of bill of exchange, classification, and acceptance of bill of exchange, and how transactions relating to bill of exchange are recorded. When we will talk about in the context of accounting, and we have discussed about accounting treatment for bills receivable and bills payable, and also we have done illustrations with relevant or related concepts about bill of exchange. In last videos we have studied or discussed about fourth options. So these are the options which are provided by bill of exchange to the dryer of bill of exchange or supplier of goods, okay, who makes sales on credit to another party. The name of the another party is receiver, purchaser, or acceptor of bill of exchange. When we will talk about in the context of bill of exchange, it will be the dry of bill of exchange. Seller will be dryer and purchaser will be dry. Okay, so in last videos we have done the first option, which was the first option for the dryer is to retain this bill in his own possession. On the due date he will present the document or bill to the acceptor and receive cash from him. That's it. Are you understand? We have also done this concept and as well as its related illustration. You can see in previous videos. All right. Next video has been made by me on second concept, which was the second option for the dryer is to discount the bill with his bank at a certain rate of discount. In this case, the bank will take the possession of bill and on the maturity date will present the bill to the acceptor and receive full payment of the bill. We have also clear understanding about this concept. We have done this concept as well as its related illustration. Alright. In last video, we have learned about the third option, which was third option opens to the dryer is to endorse the bill in favor of one of his creditors from whom he has already purchased goods on credit for the settlement of his own debts. Under this case, the creditor will take the possession of the bill. On maturity, he will now present the bill to the acceptor and accept cash to him. In this concept, we have already discussed about endorsement of bill of exchange as well as we have done its related illustration. In this concept, the dryer of the bill used the bill of exchange as the settlement of his own debt. For example, he purchased from another party. He will use the bill of exchange for settlement of his debts to this party, okay, because he have purchased from this party on credit basis. So now we will move toward our current or latest topic, which is point number 4. This is the option, in fact a part of the first one. Under this possibility, the bill is sent to the bank for collection purposes. This is not a discount of bill of exchange. Am I right? So now we will discuss about this option, and as well as we will solve the illustration with a relevant concept. So let's move. Have a look this concept. Bill sent to the bank for collection. This is the fourth option for the drawer of bill of exchange. Alright. If a businessman has numerous bills that he got from various debtors, he may send these bills to his banker for collection purposes. It should be remembered that this is not discounting of bill of exchange, and this is simple bill sent to the bank for collection. That's it. The bills are sent for safety and collection purposes. The bank keeps the bill in its custody till the due date, and on the due dates the banks will present the bill to various acceptors. After collecting the amount, the bank transfers the amount to the account of its customer or client. The customer or clients are the person who makes bill sent to the bank for collection purposes. So the bank will collect the bill by giving credit to his account. The bank charges some nominal fee from the customer or client for services he rendered. Alright? This is an expense for the customer or client and a revenue for the bank. Okay? Now I explain to you this paragraph in simple words. Bill sent to the bank for collection means the holder or drawer of the bill or supplier of the goods will send the bill to his bank for collection purposes, and the bank will collect the bill from the acceptor and the payer of the amount, okay, and will deposit into the account of drawer, okay. By this conduct, he will charge a small fee from the drawer for giving or rendered its services. That's it. This small fee will considered for the drawer as an expense, and another side is banker side. So its small fee or small charge will be for the banker as a revenue. Alright. So when we will talk about in the context of accounts, so the drawer opens a temporary account in his books when the bill is sent to the bank for collection purposes. The name of the account is Bank for Collection Account. The bill is transferred to his account and the following entry is passed in journal of drawer. Bank for Collection Account will debit in the books of drawer. The bill's receivable account will credit, which is why the logic or root cause behind this entry is this: bill's receivable account was the asset for the drawer, alright, and now it has deposited into the bank for collection purposes, and bank has give receipt for base of new current asset. This is bank for collection account, alright. So it is increase of asset bill sent for collection account, and bill's receivable account will credit, because it is the very simple rule of accounting, that is increase in asset will debit and decrease in asset will credit. So the increase in new asset in the account of drawer, which is bank for collection account debit, this entry will comes into existence in the accounts or books of drawer. Alright. Now we will move toward next. When bill is collected by the bank on the due date and intimation is received from the bank, the following entry is made in drawer's book. That means the bank will collect the bills of exchange amount from the acceptor and same time will intimate the drawer that he have received the payment from the acceptor on the behalf of the drawer. So the bank will intimate first, and when intimation received by the drawer, and immediately the entry will be in the books of drawer, bank account will debit because cash came in the bank account of drawer, and decrease in asset by the effect of increase in bank account. So decrease this asset, ultimately bank for collection account. So bank for collection account will credit. All right. And same time, some fees is charged by the bank for the services it provided to his client or customer, which is drawer. The entry in drawer's journal will be bank charges account will debit because it will be the expense for the drawer, and ultimately paid from the bank account. So the bank account will credit, which is why bank charges increase in expense. So bank charges will debit, and bank account decrease in bank balance. Reason behind of this. All right. The following entries are passed in books of bank. First, when the bill is received from the drawer for collection, no journal entry is passed, which is why no actual entry comes into existence between bank or drawer. Okay. When the bill is collected from the acceptor, the entry is cash account debit and drawer's account will credit. This entry will be in the books of bank, which is why the reason behind or logic behind this entry, bank received cash, okay, and drawer's account will be the liability for the bank, okay. So the entry will be cash account debit and drawer's account credit in the books of bank. This is the entry in case when bank receive a cash from acceptor or payer of the bill of exchange on behalf of drawer or his client or his customer. All right. The third case would be a separate entry is passed for collection charges in the books of bank, that is drawer's account will debit because reduction in drawer's account, and collection charges account credit because increase in revenue by the bank. Okay. So this is the third party, which is acceptor, payer of the bill of exchange. In the books of acceptor, the same entry is passed as in previous cases, which is very simple. When he will pay the bill's amount, that he will make an entry, bills payable account will debit because decrease in liability, and makes a payment, so the cash account will credit. So cash is the asset for the payer or acceptor, so decrease in asset will be credit. Okay, in the books of dry, acceptor or payer of the bill. Okay, so we have discussed about the concept bill sent to the bank for collection. This is the fourth option for the drawer, am I right? And we have discussed in this video when the drawer sent the bill for collection purposes toward his bank. Okay, and after that, this is the entry when he received the intimation that bank collect the bill, then the drawer's account have this entry. Okay, when bank intimate to the drawer that he have received the payment on behalf of this from the acceptor. Okay, so some entries we have mixed with banking point of view, okay, and some has acceptor point of view. Okay, for more understanding, we will discuss or solve its related illustration, which is illustration number 4, which is exists on next page. So this is the illustration number 4. So let's see the comprehension of this illustration, which is Mr. Imran sold goods to Irfan for rupees 10,000 on credit on 1st July 2005, right? On the same date, Imran drew two bills on Irfan for rupees 6,000, which is one, and second is rupees 4,000 at 2 months and 3 months respectively. That means the first bill have 2 months duration for its settlement and the second bill have 3 months duration for honor of bill of exchange. Alright. On 4th July, the first bill was discounted at the bank at the rate 15% per annum interest or discount rate, and on 6th July the other bill sent to the bank for collection. Okay, so the second bill is total relevant with this illustration as well as the concept of bill sent for bank to the bank for collection purposes. Alright, so what happened next? On the due date, both bills were honored and the bank deducted rupees 40 as a bank charges. Give journal entries in the books of Imran, Irfan and the bank. After reading the statement or comprehension of this illustration, now we will move toward its solution. Okay, when we will talk about the solution of this illustration, we have three parties. Mr. Imran, which is first party. Imran is the seller or drawer of bill of exchange in this question. Okay, and the second party, Mr. Irfan, is the purchaser who purchased from Mr. Imran on credit basis. Okay, so Mr. Irfan receives or accepts a bill from Mr. Imran against purchased goods value. Okay, and the third party involved, which is bank, between two parties, which is why the first bill got discounted from the bank and the second bill just sent to the bank for collection purposes. Am I right? So let's solve this illustration for more and clear understanding about this concept. So dear students, we have first of all Imran's journal. Okay, so Mr. Imran sold goods to Irfan on credit basis on dated 1st July 2005. Simple is that. This transaction have very simple entry, which is on date 1st July 2005, Irfan account debited here because the transactions has done on credit basis. Therefore, we will use the name of the purchaser. Okay, because this person will be the asset for the business or for Mr. Imran. Therefore, we will debit to this person Irfan account. So sales always will be credit in accounting. Okay, so to sales account will also credit with same amount 10,000 and 10,000. Okay, with details or description, goods sold on credit basis. That's it. First transactions entry has been completed here. Now we will move toward next. After entrance of selling entry or sales entry, now we will move toward next, that what happened next in this situation or in circumstances. So next, on the same date, Imran drew two bills on Irfan. Understand? First bill have amount 6,000 and second have 4,000. And the first bill have duration for honor of the bill of exchange 2 months, and the second bill, which is 4,000 rupees amounted, have 3 months duration between honor of bill of exchange. Alright, so after reading the comprehension and statement of drawing of bill of exchange, so we will move toward the entries about the bill of exchange acceptance and drawing. Okay, on same date, which is 1st July 2005. All right, So the entry will be in Imran's journal, which is bills receivable account will debit amounted 6,000 rupees to Irfan account credit with same amount 6,000 rupees. Alright. With details or description, acceptance received at 2 months. Listen carefully in very simple words. Mr. Imran sold goods to Irfan, okay, and then on credit basis, and then drew a bill on Mr. Irfan amounted 6,000 rupees. So entries would be bills receivable account will debit it here because bill receivable account is an asset for Imran, and Imran will receive the bills in next or in future dates. Okay, so Irfan account will credit here. I said earlier acceptance received at 2 months. Clear? You don't forget he drew a two bill. First one is 6,000 rupees amount. The second bill have amount 4,000 rupees. The variation exists in both entries. Above bill have 2 months duration for honoring, and second bill, which is amounted 4,000 rupees, have 3 months duration between honor of bill. Okay, with same details or description, acceptance received at 3 months. With this effect, Mr. Imran drew a bill, two bills on Mr. Irfan. First one 6,000 and second one 4,000, and Mr. Irfan accepts, making acceptance on the bill and return to Mr. Imran. Okay, so the both bills have in the custody of Mr. Imran. Okay, so Mr. Imran will be called the holder of bill of exchange. Alright, having on acceptance of Mr. Irfan. Understand? After that, we will move toward next working, which is on 4th July, the first bill was discounted at the bank at 15% per annum. Okay, so the working will be of this transaction we will discuss in the context of the entry or journal entry on date 4th July 2005. So the entry will be bank account will debit in the journal of Mr. Imran with amount 5,850. Okay, and discount account also debit because this amount will be the expense for Mr. Imran. These are the bank charges, and we will talk about in the context of bills receivables or bills payables or bills of exchange. So it will be discount rate of the bank. Okay, with 2 bills receivable account credit. Okay, this entry will be compound entry. Okay, because compound entry is the entry which have more than 2 entries, just like this. Okay, now you can understand in very simple words. In this way, Mr. Imran go toward bank and said to bank that he will discount the bill, okay, and make payment immediate to Mr. Imran. Okay, so the bank will charge on 6,000 rupees 15% interest or discount rate, and the life or duration bill of exchange 2 months. All right, so we will find 150 is the discount rate of the bank. Okay, so when we will talk about in the context of accounting or accounts, so increase in asset of Mr. Imran, which is bank account, will be debit with this amount because this amount come into Imran's bank account. Okay, and from this amount, which was total 6,000 rupees, all right, Mr. Imran pay discount rate to the bank, so will be called discount account will also debit. Okay, Asset will be debit and expense will be debit in accounts. Okay, and decrease in asset, which is bills receivable account, with total amount 6,000 rupees. All right, with details or description: bill discounted at 15% per annum. Okay, which is why this is the fixed bank discount or interest rate. So bank will receive on annual basis from its clients, who may get to discount of bills. Okay, so the life of the bill, which was 2 months, therefore we will find the interest just 2 months. Okay, 15%. Understand? So far the first bill discounted by Mr. Imran from bank. What happened next? So let's move toward next, which happened, which is on 6th July the other bill sent to the bank for collection purpose. It is just sent of bill of exchange. Okay, not discounting as first bill. Okay, therefore we will treat as a sent to the bank for collection. Simple. Okay, so this will the entry of this transaction on 6th July 2005. Mr. Imran sent the bill, second bill, toward bank for collection purposes on behalf of himself. Okay, so makes entry when sent bill to the bank for collection purposes, making an account on temporary basis called temporary account opened by Mr. Imran. Okay, in this case, so bank for collection purposes, an account will debit for Mr. Imran because it will be the asset for Mr. Imran and will also debit. Okay, with 4,000 rupees, and decrease in another asset, which is bills receivable account. You can see above, bills receivable account will debit. Okay, and when new account generate against bills receivable account, so bills receivable account credit because decrease in asset, and bank for collection account debit because increase in an asset with same amounts 4,000 rupees. All right, with details or description: bill sent to bank for collection. That's it. After that, on the due date, both bills were honored. Okay, and the bank deducted rupees 40 as bank charges with effect of collection or against collection. Okay, this is the small charge by the bank from Mr. Imran. Okay, with this effect, the journal entries would be: increase in the bank balance and temporary account closed. When with this effect, the journal entry will be in the accounts of Mr. Imran journal on date 4th October 2005, because the second bill amounted 4,000 rupees have 3 months duration. So 1st July is the transaction date or sale purchase date. Okay, so we will count from 1st July. Okay, July, August and September. Okay, 3 months has been done. Okay, so 4 days given as a relaxation days by the drawer of the bill of exchange, which is Mr. Imran. Okay, so on after 3 months, 4th October 2005, bank collect or receive a payment from Mr. Irfan of the bill and by intimate to Mr. Imran. So Mr. Imran makes entries into his journal, that is bank account debited because amount come into account of Mr. in bank account of Mr. Imran amounted 4,000 rupees, and bank for collection account credited here by Mr. Imran because increase in bank account and decrease in another asset, which was bank for collection account with same amount 4,000 rupees. With details or description: bill collected by bank from acceptor which was Mr. Irfan, who is the purchaser of the goods, and on the due date. Okay, in simple words, on due date, Mr. Irfan makes a payment of this bill to bank, and by this effect, Mr. Imran, on the intimation of bank, Mr. Imran makes these journal entries in his account. Okay, another effect comes into existence with this impact, which is increase in expense and decrease in bank balance, which is why on same date 4th October 2005, after 3 months of drawing of bill of exchange, Mr. Imran pays a cut charges of collection of bill of exchange to bank. Okay, so entry will be bank charges account debit and makes from bank account amounted 40 rupees. Okay, so bank account will credit by 40 rupees. Okay, increase in expense will debit and decrease in asset will credit with details or description. Amount deducted by the bank as collection charges. Okay, you don't forget, these are the entries which makes by Mr. Imran in his journal. Okay, with the effect of this illustration, we have three parties. First one, Mr. Imran. Second is Mr. Irfan. Third is bank. Okay, so first parties accounts we have made, which is Mr. Imran's journal. Okay, now we will move toward our next or second or another party, which is Mr. Irfan. So this is our second party, Irfan's journal. We will make in this the entries of Mr. Irfan's site. Okay, so let's start on date 1st July 2005. Same date, the entries will be opposite direction from Mr. Imran's journal. Okay, in this way, Mr. Imran sold and Mr. Irfan purchase. Okay, so purchase account will debit. Okay, to Mr. Imran account debit with same amounts 10,000 and 10,000 with details or description. Goods purchased on credit basis. Okay, same as previous concepts or workings, we have idea, on same date 1st July 2005, Mr. Imran receives or accepts the liability to pay the bills. Okay, so entries will be Imran account will debit in the accounts of Mr. Irfan, to bills payable account will credit. Okay, because increase and liability will be the credit. Okay, with details or description about first bill acceptance given at 2 months. Okay, which was 6,000 rupees, and the second bill acceptance will be by Mr. Irfan 1st July 2005. Mr. Imran account debit, same as above, but little difference of amount 4,000, to bills payable account credit 4,000. Acceptance given at 3 months. The variation have two in both entries. First one is duration, second one is amounts, difference or variation. Alright, Mr. Irfan, who is the dry acceptor or a person who is liable to pay to Mr. Imran in next or future dates, and Mr. Irfan journal have very simple entries, just like piece of cake. Okay, the next entry, when he pay to Mr. Imran and to the bank, because Mr. Imran get the bill discount from the bank and Mr. Irfan will pay to bank. Okay, with full amount 6,000 rupees. So when simple Irfan makes or pay the payment, so the entry will be in the accounts of Mr. Irfan 4th September 2005, because this bill have duration just 2 months. Okay, July, August, Okay, 4 days as a relaxation day to or for Mr. Irfan. So will be 4th September. Okay, the date will be after 2 months, 4th September 2005. Makes an entry of just pay the bills payable. So the entry will be bills payable account debit, because decrease in an liability will be debit in the language of accounts. Okay, amounted 6,000 rupees, and pay cash decrease in asset will credit, amounted 6,000 rupees. With details and description. Acceptance paid on presentation of bill of exchange from bank. Okay, which is why already Mr. Imran got discount of bill of exchange from bank, and the receiver of bill of exchange final will be bank. Okay, when we end the working or process or operation of first bill, now same time we will start the next bill. Okay, or second bill. You know, Mr. Imran receive a bill because the second bill have 3 months duration of honoring of bill of exchange. All right, so the entry will be acceptance meet after 3 months. All right, so the entry will be bills payable account debit. Same as above, decrease in liability will debit always. Amounted 4,000 rupees. 2. Decrease in asset, which is cash, by Mr. Irfan. So cash account debit amounted 4,000 rupees. With details or description. Acceptance meet at maturity on presentation of bill of exchange. Indirectly, this bill also sent or paid to the bank, because you can understand as previous working Mr. Imran journal from Mr. Imran, because Mr. Imran sent the bill for the collection purposes, so the bank collect the bill of exchange on behalf of Mr. Imran from Mr. Irfan. Okay, by this effect simply bank charges which was 40 rupees, so after completion of both or two parties accounts as well as their entries, now we will move toward our next party, which is bank. So the journal entry will be in the context of or journal of bank. You can see here bank's journal. Okay, so the first entry will be in the books of bank on 4th July 2005, when Mr. Imran, which is the holder of bill of exchange, got to word bank that he will discount the bill. Okay, same time the bank will makes entry in his journal, which are bills receivable account debit, okay, to Imran account and to discount account credited here, which is why or because this receivable account will debit for the bank, because bank will receive this amount in next or future date or after 2 months from acceptor, which is Mr. Irfan, amounted 6,000 rupees, and give to Mr. Imran, which is the drawer of bill of exchange, at spot when he got discount from bank this amount. Okay, and discount account will credit in the context of bank amounted 150, because this is the revenue or earnings of bank will be credit in the context of bank or in accounts of bank. With details or description, bill discounted at 15%, 15 per annum. And on date 6 July 2005, when bank receive a bill for collection purposes, by this effect bank have no journal entry is passed when the bill is received from the customer for collection. The reason behind no physical aspect of bank statement, because originally no cash come and no cash out in bank. Okay, so therefore bank will not make this entry. Okay, now we will go ahead. You can see on 4th September 2005. Remember, this is the date of when Mr. Irfan makes a payment to bank. Okay, so the bank receive a payment from acceptor and makes the entry in his accounts. Simple cash account debit, because cash received from acceptor by the bank 6,000 rupees, and decrease in bank's asset, which is bills receivable account, credit with same amount 6,000 rupees with details or description. Discount bill presented to the acceptor and cash received. Okay, now we will talk about next situations. We found next date, which is 4th October 2005. This is the date, you know or remember, payment of second bill date. Okay, when Mr. Irfan pay a second bill's amount, and also this amount received by bank on the behalf of his client, which is Mr. Imran, who have sent it the bill for collection purposes to his bank. Okay, so when bank receive a cash from Mr. Irfan, who is the acceptor of Mr. Imran, so the entries will be in the journal of bank. 4th October 2005, cash account debit with 4,000 to Imran account credit 4,000 with details or description, amount of bill collected from the acceptor on behalf of the customer Imran. Okay, because bank receive a cash, increase in asset will debit and will give to Mr. Imran, so Mr. Imran account credited here with the effect of receiving of cash. All right, what happened next? The last entry of this illustration is on 4th October 2005. On same date, bank charge a small fee for collection of bill of exchange on the behalf of his client, which is Mr. Imran. So Imran account debited here amounted 40 rupees, and collection charges account with same amount 40 rupees will credit, because collection charges account is the revenue or income for the bank, therefore will credit in the books or accounts of bank with details or description, charges deducted from Imran's account. Okay, so dear students, we have completed this illustration and makes the entries in all parties, which are three parties: Imran, who is the seller or dryer of bill of exchange, and Mr. Irfan, who is the purchaser or dry or acceptor of bill of exchange, and the third party who involves by two persons, Mr. Imran as well as Mr. Irfan. The third or last party is bank. If you have any ambiguity or confusion in these concepts which I have discussed in this video, so please contact on WhatsApp number. And another thing is that if you like this video, then don't forget share, subscribe and comment. Thank you all.